educating and caring for all of our young children when this public health crisis is over. We certainly don't have all the answers yet, but we are working every day to try to get you the information you need, share resources with you as they become available, and elevate the important role that you play in our communities and across the country. So thank you so much for everything that you do. I'm going to quickly just review the agenda and we'll get started. First, we'll hear from Neil Bradley, our Chief Policy Officer at the U.S. Chamber of Commerce on the federal COVID-19 response. Then we'll hear from Sarah Rittling, Executive Director of the First 5 Years Fund, on how the CARES Act specifically addresses early education needs and what you can do to access that funding support. Then we'll turn to Bridget Weston, Acting CEO of SCORE Association. Bridget will share with you the resources that already exist in your community and how you can access some of the tools that SCORE has created to help small business owners. And lastly, we'll hear from Les Pasternak, Group Manager from PNC Bank SBA Finance, who will talk about the application process for the Paycheck Protection Program. We'll have time for questions at the end, so please put your questions in the chat box throughout the webinar. We'll try our best to answer as many as we can, but I know we've got thousands of folks on this webinar, so we won't be able to get to all of them. Now, to get started, as I mentioned, we'll begin with the Chamber's Chief Policy Officer, Neil Bradley. We're so grateful that he was able to share some time with us this afternoon, so I'll hand it over to you, Neil.
Well, thank you, Cheryl, and thanks everyone for joining us today. We're going to quickly walk through some of the highlights of the federal legislation that might be relevant to the folks attending today's webinar. And we have a set of slides, which I think were perfect. They're just now being teed up here. So far, Congress has passed and the President signed a law 3 separate pieces of legislation. The first was really focused in the early stages of the outbreak and supporting federal health programs. The second phase, and it became known as the Phase 2 legislation, focused on paid sick and family leave for employers with fewer than 500 employees, as well as making sure that tests for COVID-19 were done at no cost to recipients. And the third, where we'll spend our time today, is the CARES Act. This is the bill that was enacted a $1 package that includes support for individuals, families, communities, health centers, and importantly, businesses and nonprofits. And so we're going to walk through some of those provisions that are relevant now. If we go to the next slide. Let's start with the support for individuals. $1,200 payments per individual, $2,400 for a joint return, plus an additional $500 per child being administered through the IRS. If you filed your 2019 tax returns already, they'll base it based off what you filed for 2019. If you haven't, they'll use your 2018 returns. There's no other thing that anyone has to do to qualify for this. It does, however, phase out beginning at $75,000 in income for an individual or $150,000 in income for a couple filing jointly. As we all saw last Thursday and sadly the Thursday before that, we are experiencing record numbers of unemployment filings. The CARES Act expands unemployment significantly, both in terms of eligibility and the amount of unemployment assistance an individual can receive. If you're familiar with the unemployment system, you know that there are a number of restrictions that limit an individual's eligibility. If, for example, they're an independent contractor or they've already exhausted their unemployment benefits, they're generally ineligible for additional benefits. Most of those restrictions are suspended to the extent that they are related to the COVID-19 outbreak. In addition, Congress is providing another $600 per week on top of an individual's regular state-calculated unemployment insurance benefit, and that runs through the end of July. There's been a lot of questions about eligibility and the ability to work. Understand that the requirement that if you are offered the option of going back to work and you can go back to your place of employment, in general, your eligibility for unemployment insurance ends at that time. And while this is a federally funded program at this point, benefits are still provided through your state UI offices. Let's talk about some of the provisions relative to employers. Let me start with one that provisions that impact and are available to all employers regardless of size. This first one hasn't received much attention, but can be quite meaningful, particularly if you're an employer who is still paying your employees, still operating. That's the ability to defer the payment of the employer portion of the payroll taxes. As you know, when you pay your employees, you write them a check, and then you turn around and you write a check to Uncle Sam for the employee and the employer's portion of payroll taxes. Between now and the end of this year, an employer can defer the payment of their portion of those payroll taxes. So that's that 6.2% we pay towards Social Security. If you elect to delay, you'll owe 50% of that deferred payroll tax at the end of 2021, and another 50% at the end, the remaining 50% at the end of 2022. Importantly, if you are a small business and you're taking advantage of the Paycheck Protection Program, you are no longer eligible to defer your payroll taxes if you get loan forgiveness under that program. Another provision that applies to all employers, for-profit and nonprofit, is an employee retention tax credit. In general, if you have had operations fully or partially shut down as a result of a governmental order, or you have gross receipts that are down by 50% or more in a calendar quarter in 2020 versus the same quarter in 2019, you qualify. What do you qualify for? A fully refundable tax credit for 50% of wages up to $10,000 per employee. And importantly, there is a distinction about the employees who qualify based on the employer's size. If an employer has more than 100 employees, you only qualify if you're paying an employee who is not providing their normal services. Now, that's an undefined term in the legislation. We don't know exactly how the IRS is going to interpret that, but one thing we're watching for is how that inability to provide service on the part of an employee is interpreted. If you have fewer than 100 employees, it doesn't matter because you get the tax credit for paying an employee during one of those periods, whether either fully or partially shut down or had that drop in revenue, irrespective of whether the employee is providing services or not. Importantly, again, if you're a small business and you take advantage of the Paycheck Protection Program, you lose your ability to qualify for the employee retention tax credit. Let's go to the next slide and we'll talk a little bit about that Paycheck Protection Program. This is $349 billion in loans for small businesses, sole proprietors, independent contractors. Small businesses are generally defined as those with less than 500 employees. The normal affiliation rules of the SBA apply to this program. A borrower can borrow 2.5 months worth of their average payroll, not to exceed $10 million. These loans are being made not by the SBA, but rather by local and national lenders. You've probably seen the stories. Lenders began accepting applications on Friday, and it's expected that the number of lenders participating in this program will continue to grow day by day. Employers, borrowers, have the option of converting their loan into a grant, and that amount of loan forgiveness or grant amount is based on what the borrower spends on payroll, rent, interest on mortgages, and utilities for the 8 weeks beginning after origination of the loan. Now, that's your maximum amount of loan forgiveness, what you spend on employees, those qualified expenses in the 8 weeks after loan origination. However, your maximum amount of loan forgiveness can be reduced if you've reduced your employee headcount or cut wages by more than 25%, and you don't restore them over the period after you receive the loan and through June 30th. And so an important thing to watch out for is both, if you're counting on loan forgiveness, is what you're spending in the 8 weeks after origination, and then your employee headcount and pay levels relative to before the coronavirus through June 30th, 2020. Another program available for small businesses is the EIDL program. If we go to the next slide. Go to the next slide. If any of you have been in an area impacted by a natural disaster, hurricane, tornado, flooding, for example, you may be familiar with the Small Business Administration's Economic Injury Disaster Loans, or EIDL loans. This is a long-standing loan program. It generally provides up to $2 million in working capital at a reduced interest rate over a 30-year term. The program has been expanded as part of the CARES Act, and the underwriting has generally been reduced. So loans are based on credit scores. You don't have any need to provide a tax return. You can get up to $200,000 without a personal guarantee, up to $25,000 with no collateral, and new, as part of the CARES Act, you can qualify and receive up to $10,000 in an emergency grant within 3 days of applying for an EIDL loan. So you apply for EIDL loans through the SBA. You can go to sba.gov and fill out the online application. If you receive the $10,000 emergency grant, that does not have to be repaid. And you get the grant, even if you end up later being denied the loan, you still get to keep the $10,000 grant. Now, if you take the grant and the $10,000 and you get a Paycheck Protection Program loan, they'll reduce your forgiveness on the PPP loan by that same amount. And so there's an obvious interaction there. This program is also being heavily subscribed at the moment. Our conversations is the SBA is having difficulty keeping up with loan applications, but it's an important program that's available there to small businesses as they consider their options. So with that, I'll stop and we can turn it back over to Cheryl and proceed with the program or any questions that people might have.
Thank you so much, Neil. So we have a few questions coming in, and since you're a little bit early from your slotted time, we'd love to ask you a few questions.
That'd be great. Thank you, Julie.
To start, if PPP doesn't cover payroll taxes, what else won't it cover?
So it does not cover payroll taxes. So it covers, there are two aspects to it. There is your how much you can borrow, that is based off of your average monthly payroll costs, which does not include payroll taxes, but includes the wages that you pay your employees. If you provide health care, the pro rata apportioned cost of providing them with health care. If you provide retirement benefits, the same for retirement benefits, paid leave, paid sick leave, all of those normal benefits factor into the amount that you can borrow. And then when you receive a loan, and you begin paying your employees and paying your other expenses in that 8 weeks after origination, your loan forgiveness is based on that same payroll expenses, plus in addition to that, mortgage interest, rent on facilities, and utilities. So think about this. You're borrowing based on payroll over a 2.5-month period. You're getting your loan forgiveness based on your expenses over 8 weeks, but with a broader pool of qualifying expenses.
Okay, great. Thank you for clarifying. Can we back up a little bit and can you explain what a forgivable loan is?
So the loan simply converts into a grant. So you receive a loan, and at first it operates like any normal loan. You have a term, in this case for the Paycheck Protection Program loans, it's a term of 2 years. You have a fixed interest rate, in this case 1%, and you have the ability, payments are automatically deferred for this first 6 months. So everyone initially gets a loan. It's like getting a loan from any other lender, just with those very specific fixed terms. Then, after we get through June 30th, you'll have the opportunity to go back to your lender and provide documentation about what you spent money on in that 8 weeks after you received the loan. And based off of those expenses, they will forgive a portion up to 100% of your full loan. In that case, the loan becomes a grant and it's completely forgiven.
Great, that makes a lot of sense. Can you explain if affiliated businesses can apply for PPP, and if so, how?
So the SBA has long-standing affiliation rules, and affiliation rules is a way of taking businesses that either have common ownership or common management, and rather than treating them as individual entities, treating them as one entity. This particularly matters for the SBA programs and the Paycheck Protection program because there are size limits. And so if you have to qualify, you generally have to have fewer than 500 employees. But if you're part of a franchise, for example, model, or there's shared ownership, it's possible that they aggregate your location with other locations for determining whether you meet that size threshold. As a general matter, the affiliation rules apply to the PPP program. There was an exception made in the legislation for affiliation rules around folks in the accommodation, read hotels, and restaurant sectors. And so those are the only sectors. It's called NAICS 72. It's an industry code that the affiliation rules don't apply to. So if you have an affiliation with someone, common ownership, common management, you'll want to be aware of those rules because it could cause you to have your employee headcount added together, which would then potentially disqualify you for the loan program.
So then to clarify, for anyone who's listening right now who's part of an affiliated business, would it be best if they look up their NAICS code for the affiliation and make sure that they either are or are not code 72? Is that what you're saying?
Yeah, code 72, if you're in code 72, the affiliation rules don't apply. That is generally probably not folks who are joining us today because it really is folks in the hotel, accommodation, and restaurant. Think about restaurant chains and hotel chains. I believe most childcare is not, I'm not aware of any childcare in NAICS 72. So the thing you would want to check is the normal affiliation rules. If you are affiliated with other entities, whether or not collectively you all would no longer qualify for the loans because of your headcount.
Okay, got it. Thank you for clarifying. And then one last question before we move on. I wanted to ask, we've gotten a lot of questions around where folks can apply for PPP and concerns that there are lenders who will not give you access to PPP if you don't already bank with them. Can you give us any clarity about, who the SBA is allowing to be a lender, a certified lender, and then, what folks should do if they are not banking with a bank that is accepting PPP applications?
Yeah, so the program started out with financial institutions, banks, that were already certified 7A lenders. 7A is a SBA loan program done through private banks. So it started with those lenders. The Treasury Department is expanding the number of eligible lenders to include all federally insured banks and all insured credit unions. And then they will also be adding, in addition to that, certain fintech companies, so online lenders who have a particular proven track record and book of business. These loans started last Friday. Now, interestingly, the banks didn't receive the final guidance or even the final form until late at night on Thursday for loans that they were supposed to start making on Friday. So one of the things that a number of banking institutions did reasonably to prioritize was they started with the customers, small businesses that they already had a relationship with. This helped them work through the requirements, for example, that they know who the customer is and that they're monitoring for anti-money laundering violations. So we expect in the days ahead, both the number of lenders will expand, and in addition, banks will be providing to more potential borrowers. So that's the goal. It's just a big program with lots of interest in it, and we have to be a little bit patient as we go through implementation.
Great. Thank you so much, Neil. If you have to jump off, we completely understand, but I know you've got a lot more questions coming in. So if you can stay on at the end, we'll ask you more for those folks who are submitting more questions. So we are moving on. My name is Julia Barfield and I am not Sarah Rittling, but we are having some technical difficulties. So we are going to, I'm going to take an executive administration and just talk about the early education provisions that are in the CARES Act. As Neil mentioned, there are a lot of options for small business owners, but there are several line items in the CARES Act that apply specifically to early childhood education programs. There is a lot more information out there, and similar to how the information regarding SBA lending is going, we will continue to see developments with these funding streams for early education programs. But we wanted to touch on a few of the items to begin with. First is an additional $3.5 billion for the childcare development block grant. As many of you are very familiar, the CCDBG funding is how the majority of federal childcare funding is administered to states. So this additional funding is for childcare assistance for healthcare sector employees, emergency responders, sanitation workers, and other employees who may be not eligible for childcare assistance due to their income, but as a result of COVID-19 have been asked to work. And therefore, this additional money is supposed to help them maintain access to childcare while being deemed an essential worker. So the lead state agencies who oversee CCDBG funding all day, all year long, they are in charge of deciding and determining how best to use these additional funds. There are some changes potentially in how much each state will get. Right now, as CCDBG is given out, it is based on a formula, but there may be some regulatory changes based on how CCDBG is administered. Again, this information is evolving as the Administration of Children and Families and state agencies determine how to support frontline workers and how to support any programs that are already taking childcare assistance and need those reimbursement dollars, even if families aren't showing up. So you should be hearing from your state agencies. If you access CCDBG funding, you should be getting more clarity from your state agencies. That does not mean that they have all the answers yet, but we are hoping that as time goes on and they have a greater understanding of how to use these funds, they will then inform you on what their plan is. There is an additional $30.75 billion for state fiscal stabilization fund. And this money could be used for early ed programs and care. But again, there is not a lot of clarity around how to access these funds yet and how they're going to be administered. So there is funding available potentially, but they're waiting to determine how best to use these funds. Lastly, there is $750 million for Head Start funding. If you are a Head Start program listening in, you will very likely hear from your Office of Head Start at the state level. They will be determining how to support Head Start programs and how they will administer those dollars. But again, this is for folks who will likely be needing to be frontline workers or essential workers and trying to get access to childcare. So there's an acknowledgement that childcare is crucial under the CARES Act and with this additional support, but there is still need for more clarity. So now we are going to turn it over to Bridget Weston. She is the acting Chief Executive Officer of the SCORE Association, and she's going to dive into what additional supports there are already in your community to help you navigate funding and have support as a small business owner. So Bridget, take it away.
Thank you so much. Thank you to the U.S. Chamber Foundation for hosting this webinar. And thanks to all of you who are attending for all that you do. Your services are truly critical. I myself am working from home and now have my 5-year-old at home. So while I've always appreciated our childcare providers, these last few weeks have increased that gratitude greatly. I'm really excited to have the opportunity to talk to you all about SCORE. SCORE is a national nonprofit and a resource partner of the Small Business Administration. And we provide free expert business mentoring and education through a nationwide network of volunteers. We have been around since 1964, and our more than 10,000 volunteers are there to help you navigate this crisis and be there for the life of your business. Our volunteers have been in business, understand how to get through crises, and are standing by ready to help you. And again, the mentoring is all free because we are a resource partner of the SBA. So what does mentoring mean? We provide free video, phone, or email mentoring to any current or potential small business owner in the US. And we'll get into more specifics about what that can mean around the COVID-19 and all of the loan and grant options that Neil spoke about. We also provide a ton of online education, free business resources, and information that we have gathered around how to recover from a disaster and what you can do to maintain your business operations, sustain your business, and thrive in the future. We are also putting on webinars just like this, covering business topics that matter to you. And a lot of them are, of course, today are focused on how you can navigate through this time. Next slide, please. So I mentioned that we have a nationwide network of 10,000 volunteers. We are in and a part of the communities you serve. So while we are not meeting in person, face-to-face with you, our expert mentor volunteers are still ready to meet with you virtually. We use Zoom, we use Google Hangout or Skype, whatever it is. And that mentoring is free, personalized assistance to address the current crisis to help you adapt your business. We do also offer local workshops and events, and we have transitioned all of these to be online. Next slide. So you heard from the previous presenters that there are a number of financial support options available during COVID. These funding options are available and more are becoming available every day. There are a lot of organizations out there that are working to provide grant opportunities as well. So how do you find the best possible option for you? And how do you make sure your application is in the best position to get you that funding opportunity? So that's where SCORE comes in. We have developed a coronavirus small business resource hub where the most up-to-date information will live. So for example, when the loan application for the PPP program went live on Friday, that page was updated to reflect the changes. So I would encourage you to go to score.org/coronavirus for a number of up-to-date informational pieces, resources, and other articles that may help you. And then connect with a free SCORE mentor. They can walk you through the grant and loan application processes. Next slide. So what will that mentor do? They'll help you figure out which funding source or sources make sense for you. They will help you get your financial statements and other information that you'll need to prepare to apply ready. They can help you determine how best to use your loan to ensure your business's survival and thriving into the future. And if for some reason your loan is denied, a SCORE mentor can work with you to figure out the next steps and finding alternate sources. And again, all of this is free. It is a federally funded program. We are here to help you, and we want to make sure that you all get through this with as much support as you need. So please feel free to reach out at score.org/coronavirus, and we're ready to help.
Thank you so much, Bridget. We really appreciate your input. And for all of you who are listening in, SCORE has a ton of resources they sent us over today, and we will be sharing all of those with links to all of their materials as a follow-up. Additionally, there will be opportunities for you to look at the materials they've created and the role that SCORE mentors play in your community. At this time, we're going to turn it over to Les Pasternak. He is the group manager at PNC SBA Finance Group, and he's going to walk us through the steps to apply for the Paycheck Protection Program. So Les, go ahead.
Thank you, and good afternoon, everyone. As mentioned, my name is Les Pasternak, and I'm the group manager for PNC SBA Finance Group. And there's three important topics that I wanted to talk about here this afternoon, given the important role you play for so many different things that are going on today. So the first is kind of the preparation for the application, and then I'll transition over into the necessary documentation as it stands today, and then kind of 3 steps that everyone can take to be in a position to proceed. So in terms of the prior steps to the application, I want to share a couple of pieces of information that support Neil's earlier comments. So small and medium-sized businesses that were in operation on or before February 15th, 2020, with 500 or fewer full or part-time employees are generally eligible to apply for this loan. Independent contractors can apply on their own and do not count towards the employee count. In addition, the businesses must have paid salaries and payroll taxes or paid independent contractors. Businesses can also qualify by meeting the SBA's NAICS-based size test, and realizing that it might not be, totally critical given the types of these businesses, but wanted to share that as well. And details on the SBA size standards can be found on the SBA.gov website. Shifting over to the necessary documents, and again, based on current guidance, you can gather the following documentations for the Paycheck Protection Program loan. And there's a handful of items that I'll share here with everyone. First is your 2019 IRS quarterly payroll tax reports, like a 940, 941, or 944. The payroll reports for a 12-month period include the gross wages for each employee, including officers if paid W-2 wages, paid time off for each employee, vacation pay for each employee, family medical leave pay for each employee, and state and local taxes assessed on an employee's compensation. The next item, for 1099s for independent contractors for 2019 as well. Also, documentation showing total of all health insurance premiums paid by the company owner under a group health plan. Should include all employees and the company owners. And lastly, document the sum of all retirement plan funding that was paid by the company owner. It does not include funding that came from the employees out of their paycheck deferrals, but includes all employees, including company owners, 401k plans, simple IRA, and SEP IRAs. And a critical component that we're getting a lot of is, what are my next steps? So as you go through and prepare for the application and gather your information, three primary guidance that I can provide. The first is to contact your financial advisor or someone like a SCORE program to help you support you with the questions that you might have. Visit your bank's website to understand what they're doing with regards to the program, and then obviously contact your current bank or your financial institution to understand their application process. So appreciate the time. Thanks for having me this afternoon, and I will pass it back.
Great, thank you so much, Les. We really appreciate the insight from one bank, and I know many are handling it in different ways, but we really appreciate your perspective. So we have a ton of more questions, and I'd love to just, Les, if you are able to answer, or Neil, I've unmuted you as well, if you're able to answer. A lot of people have applied for emergency funding already, and they have not heard a response from the SBA. So they're just wondering what the timeline looks like, knowing that things are evolving every day. Do you have any insight on when they may hear back from the SBA about emergency funding?
This is Neil. Our conversations with the SBA, including over the weekend, I mean, they have a significant backlog. Folks have been overwhelmed with applications. They are working through those as quickly as possible. We do know that folks are receiving notifications, at least confirmations, that their idle loan applications are being processed. So it's happening. It's just a little bit slower than any of us would like.
Great, thank you for explaining that. Can you talk about when the PPP funding would begin, especially if companies are shut down right now, either fully or partially shut down as a result of COVID? Does it impact them when they return or reopen, or can you review that timeline again, please?
Sure. The program, went online for most small employers last Friday in terms of your ability to apply for a loan. It ends on June 30th. The important thing and the important aspect, and I think of what the questioner is getting at, though, is really the portion, the time period for loan forgiveness. So the time period in which you calculate your maximum amount of loan forgiveness is the expenditures that you have for the 8 weeks after the origination of the loan. So if you get the loan, if the loan is originated, let's say tomorrow, it's the 8 weeks following that. The law is silent on whether or not that your business is reopened or whether you've brought employees back. It doesn't recognize that you could be delayed in that, because their purpose, the author's purpose in creating this provision, was to enable small businesses to keep paying their employees, irrespective of whether or not their employees were actually at work, or whether they were essentially at home because of the shelter in place order. So you got to, if you're thinking about taking out a PPP loan and you're focused on forgiveness, understand that the tallying of your expenses that qualify for loan forgiveness begin immediately after you originate that loan and for the following 8 weeks. And it doesn't matter whether or not your business was partially or fully shut down during that period.
Great. Well, you teed yourself up very well for our next question. They had a question about how do they determine which employees would be paid through PPP? And you mentioned the loan forgiveness and the goal of loan forgiveness. So can you talk a little bit about how wages or hour changes impact one's ability to have their loan forgiven?
So in general, what they're looking at for loan forgiveness, in addition to how much did you spend on payroll and the utilities and rent, then they're going to be looking at, did you reduce your employee headcount? And we know that a lot of businesses have already had to reduce their employee headcount. So it gives you the option of bringing those employees back. That's the first thing they look at. The second thing they look at is, did you reduce compensation to employees who earn less than $100,000 by more than 25%? The law doesn't specify, did you reduce it because the hours were reduced, or did you reduce it and just reducing their rate of pay? It doesn't get into that. We might see guidance at some point from the administration on that, but in general, understand what the intent of the program. The intent of the program was to enable businesses to keep paying their workers, not to have to lay them off, and not to have to significantly reduce their take-home pay.
Okay, great. What about businesses that started recently? There was one person who asked a question about, they just opened their childcare program in early January, and we're wondering how that impacts their ability to be eligible for PPP.
So you are eligible, you'll just have a different window from which to calculate your maximum loan amount, because obviously you didn't have average payroll in 2019. So it provides the opportunity for you to look at your payroll in January and February.
Okay, great. And what about if you bank with a credit union that isn't yet eligible to administer PPP funding? Are we thinking that there will be more programs that are going to be eligible in the coming days?
I do think we'll see the number of financial institutions participating growing in the coming days.
Okay, great. It looks like we don't have a ton of more questions coming in, so I'm gonna talk a little bit more about the next steps and point you to some resources that we've already created for you. So we have created a ton of resources, as you can see here. I wanna make sure that everyone knows we are recording this webinar, and we will be sending out links to all of the materials that we've created thus far. But if you go to uschamberfoundation.org/coronavirus, you will see many of these resources. It's an overview of the PPP, both in English and Spanish. It's also resources about the difference between PPP versus EIDL loans, an overview of the explanation of the employee retention credit and the payroll deferment. We also collaborated with the First 5 Years Fund on an FAQ regarding the options for childcare providers. So we will link to all of those resources. But in the coming days, if you have more questions, please follow up with us at the email address here. It's education@ uschamber.com, and we would love to be helpful if we can. And if we can't answer your question, we'll try to point you to someone else who knows. But we recognize that there are resources coming from all different sites and that you are trying to navigate those resources along with your bills, operating, keeping your family safe, keeping your programs healthy. So we understand that there's a lot to navigate. Please know that we want to be available to you and that we are learning more information every day. So please continue to check back at our website, uschamberfoundation.org/coronavirus for more information. That'll be constantly evolving. So thank you all for your time. We know that there are a lot of ways you could have spent this hour or so with us. So we appreciate your willingness to join in. And we will hopefully send this information out shortly, either today or tomorrow. And then we'll have the recording posted online as well. So thank you very much and enjoy the rest of your day.